back with a new video talking about Facebook's earnings. So the company reported earnings yesterday, actually, and we're just going to kind of go through and look at how you should look at an earnings report and what we think about Facebook's stock overall. So the last year has been a bit rocky for Facebook, namely because data security and privacy issues. So Facebook has become so ingrained in so many people's lives that the company has a whole new set of issues that it's had to deal with. Particularly that they use and sell your personal data to give advertisers an insight so that they can sell more products to you. And so that's become kind of a problem. And actually, since a high in the stock a couple months ago, at the midpoint of December, the stock was actually down 42%. The stock was trading basically for a value proposition. So the company reported earnings yesterday, and there was a few things to look for. So one big thing that a lot of people look at is the monthly active users, or MAUs. And this is how many people use Facebook on a monthly basis. And this number came in at 2.3 billion people. Just think about that. The Earth's population is about 7.4 billion people. So 2.3 billion people. And that's not Instagram, that's not WhatsApp, that's just Facebook on a monthly basis. On a daily basis, that number is 1.5 billion people. And so that actually is not even representative because internet users, not everybody uses the internet, right? There's about 4.2 billion people that use the internet. So on 1.5 billion of 4.2, that's over 30% of everybody that has access to the internet is using Facebook, which is crazy. The company also mentioned that actually, when they integrate Instagram and WhatsApp in the numbers, it comes out to 2.7 billion people. So it's just big numbers, right? Just huge numbers. But what's interesting is the US and Canada, so North America, actually makes up only about 1/10 of those monthly active users. And so out of that 2.3 billion, it's about 230 million. Which is still a big number, but it's 1/10 of the total amount of users. However, US and Canada make up about half of revenues. So even though they make up 10% of the actual number of users, make up about 50% of the revenues. And you can just see the amount of average revenue per user in all these geographies. You can just see the US and Canada are so much higher, for instance, than the rest of the world, which is over 17 times the amount of revenue per user than the rest of the world, 11 times more than Asia Pacific, and 3 times more than Europe. So just big numbers here. And you can actually see that in the last year alone in US and Canada, Facebook has actually increased the prices 30%. This doesn't mean that Facebook has raised the price of its ads 30%. Rather, it's because Instagram and WhatsApp have actually become sources of monetization. So Instagram particularly has really grown as a source of revenue for Facebook. Back years ago, I remember Facebook bought Instagram for $1 billion and everybody was like, that's ridiculous, they're overpaying so much. But estimates actually go that Instagram is worth $100 billion itself. And Facebook is about 480 billion. So Facebook's acquisition of Instagram has actually been a huge driver of its growth over the past couple years. Just some more metrics. So year over year, Facebook increased revenue about 30%. This is down from about 40% in the past couple quarters, but that was to be expected because first of all, we have that saturation of monthly and daily active users. Those numbers really aren't growing a ton, even though there are just so many people using Facebook that it's hard for them to grow their user base. Secondly, with the data security, some advertisers have actually slowed their spend on Facebook's platform. For instance, Facebook has to actually put a cap on how much it raises prices for advertisers at one time. Over time, they can actually raise prices, but if they increased it like 30%, then it would actually disincentivize those 9 million advertisers to maybe jump onto another platform, say Instagram, where maybe the prices aren't as high yet, or YouTube, or something else. As we can see on a profitability basis, the income from operations actually stayed about the same. This is because margins shrunk from 57% to 46%. A lot of this actually has to do with the cost of goods sold, so it's getting more expensive to host for Facebook. That's because the company is really driving to invest in security and actually to ramp up the platform. So you can see in this chart, the company has actually been spending so much on capital expenditures. So it's up from $6.7 billion in 2017 to this past year, more than $13 billion. And actually, in the latest conference call, the company said it would spend anywhere from $18 to $20 billion just on capital expenditures. And so this is primarily going towards data centers. What's interesting is that if you compare the amount it's spending versus the number 2 cloud titan in the world, Microsoft, it's actually fairly comparable. And Facebook is actually on pace to outspend Microsoft in the next year. And that's just crazy. It would be interesting to see if Facebook actually does become its own cloud titan in the future, just because they're spending so outrageously on creating a better infrastructure. So after earnings, the stock actually popped about 11%. And this was because first, revenue actually came in above expectations, and earnings did as well. One thing to note particularly is that the company saw really good results in the stories version of Facebook and Instagram. So a lot of advertisers are actually going to these stories in order to get a higher ROA. So usually ROA means return on assets, but this is actually return on attention. So while the core platform of Facebook, it might be stagnating, a lot of other revenue streams like Instagram and WhatsApp could well make up for it. And so that's kind of the synopsis, and I think Facebook in the long term will be a good buy as a stock. However, please do your own research because this is just one man's opinion. However, as we see in the company, the stock price has actually increased off the lows around 130. And so that was clearly too low a price, and the market repriced it because of this earnings call. What's interesting is sometimes you have to just look at the real world facts. And so if I looked at the real world facts around me, it's actually none of my friends really use Facebook, and it's all about Instagram, YouTube, and kind of some of these younger platforms. But Facebook, they're really extracting advertisers' dollars still. And so you kind of have to look at these real world numbers versus kind of your real world observations. And sometimes these two can be very different. And so that's an investing lesson that I would say is actually very underrated, because a lot of times we can just look around and say, I know that Facebook is kind of slowing, they're just going to be terrible in the future. Well, maybe they are, and maybe the stock is actually too pessimistically priced, and therefore it could actually be a good stock. And so that's something to kind of think about, just toy around with, because I think Facebook will be a good company from here on out, even though maybe some of their users will actually kind of stagnate. I hope that kind of makes sense. Well, I really appreciate you. Have a good one. What's up, everyone? Thank you so much for watching this video. Really appreciate it, though. If you want more information, head over to our website at investingcity.org, where you can find podcasts, more videos, a blog, subscriptions, just anything you need. Anything to become the best investor possible. With that, we really appreciate you. We love you.